Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, promoters of online pharmacy Pharmeasy have raised $50 million from a clutch of investors, including investment arms of Fidelity and Nandan Nilekani. I caught up with them and began by asking them about what the company does and on details of this current round of funding.
We started 3.5 years back, as you rightly pointed out. And when we started, the biggest problem that we saw in the Indian healthcare ecosystem was that it was completely fragmented. So a patient used to visit a doctor, visit a medical store, and then visit a diagnostic center. All of this was completely fragmented. And we said we need to fix this. That's where we thought that where do we start with? And we realized that 80% of the spends on healthcare are generally on medicines. And that's how Pharmeasy as a concept came about. And I think we've grown from there. We've grown in terms of geography, in terms of manpower, in terms of consumers that we cater to.
So what exactly is your reach right now and how many geographies are you present in?
So currently we deliver to all the 22,000 pin codes in the country. We deliver to every nook and corner while we speak, and we would have historically till now catered to roughly around 3 million people till date.
And what exactly does the business model comprise of?
So a patient can come onto the app or give us a simple phone call, upload their prescription. Our pharmacist will reach out and counsel the patient, post to which our partner retailer will fulfill all the products required on the prescription through our network of delivery boys. So it's a seamless experience for the customer. They have to do nothing. So if you are not well, we will take care of you. Why do you need to step out? Is this plain simple offering? And obviously all this comes with added benefit of a lot of healthcare savings overall.
Dharmil, this latest round of funding, it's around $50 million that you've raised from the likes of Nandan Nilekani as well as Fidelity. Tell us more about this particular round, and it would be the third since you all have begun.
Sure. So, while we started out in 2015, friends and family backed us to sort of, test it out, see whether this is actually going the right way. The first round happened when, Bessemer, Orias, RN Capital, these folks partnered with us. It was their belief that, we can do something in this space. That fund was utilized to basically test out whether we can create demand, whether there is any demand in the market. The second round of funding, when it happened, $17 million round, where the internal folks backed us, again, Bessemer, Orias, and a few other folks. That round basically helped us to spread geographically, spread across the country and get more consumer demand to transact on our platform, and also create a business model, a viable, sustainable business model. Once we did that, this round, the current new investors that we've got, 8 Roads, Fundamentum, Think Capital, this fund is going to be used to infuse into growth, to get more customers to transact with us, to infuse into technology, to create seamless operations, to make all the smaller operations element to be much more efficient than they are, to infuse into better logistics, to infuse into better warehousing, to infuse into better communication channels between the customer and the company. This is what we are going to work on, which is where there's going to be a huge investment going in technology itself. So that's what we are looking out for with this fund, and it'll be utilized in these spaces.
Well, Taj Mahal will go under the hammer today. We'll get you details on the other side of the short break. Well, the stage is set for the much-delayed auction of Taj Mahal today. We learned that the Tata Group will have to slug it out with ITC in an e-auction to retain the iconic hotel. Kritika Saxena has been on top of that story. She's joining in with more details.
It's the clash of the titans. Tata Group and ITC will be submitting their financial bids for Taj Mahal in an e-auction which is going to be conducted today. Later today we should have some clarity on who the possible winner could be. But just to give you an idea about how the process unfolded this time, bidders were expected to submit technical bids between the 12th of September to the 20th of September. Now in that period we understand that only two players, that is ITC and Tata Group, have submitted bids, and both have cleared the fit and proper criteria and the various criteria that NDMC had laid out for the bidding of Taj Mahal. So the fact that the bids have been shortlisted and there have been no issues with the bids in itself is a big positive, and the fact that the e-auction is going to be conducted today is a positive. So it could perhaps be that NDMC will be fourth time lucky. Remember, Taj Mahal was leased to the Tatas for a period of 33 years in 1978. Since then, Tatas have been operating Taj Mahal with 9 temporary extensions. They have been battled in a court, embroiled in a court battle for the last couple of years. So now that the deal is expected to go through, we need to wait and watch out to see who emerges the victor in the two corporate giants.
Okay, time for a break now, but thanks Kritika for that. We'll get your check on all the cues to watch out for from the futures and options space coming up. Welcome back. Well, we have Manisha Gupta joining in with an update on all what's taking place in the commodity and the currency space. Manisha, morning.
Hi. Well, it is the US dollar at play again, where you have seen it gain up to a 9-month highs versus the Japanese yen. The US data has been on the stronger side. We've seen the US GDP numbers for the second quarter come in quite strong, the best in the last 4 years actually, and that is weighing on the metal space. So you have the gold, silver, and the base metal prices decline for a 5th straight day today. What has seen constant strength though is the crude oil prices, which are headed for a 3rd weekly gain, a 5th quarterly gain as well. The Iran sanctions have led to supply tightness. You also have seen more decline in sense of Venezuela output, and that's weighing onto the prices. The only thing that perhaps tells you that the markets wouldn't continue to go in one way is the OPEC report, which says that in 2019, the U.S. output would be much higher than the non-OPEC demand. So the next 6 months, of course, are going to be volatile and you might see stronger prices. But from the second quarter of 2019 calendar year, there is softness expected in case of crude.
Okay, all right. Thanks so much, Manisha, for joining in and filling us in with all those details. Well, yesterday was yet another weak session for the Nifty. By the end of the day, we were trying to look at the cash market numbers, and that didn't really tell you the picture because we ended virtually at the low point of the day yesterday. But the FIs, there was mild buying, the DIs that was selling. Remember, it was the final day of a series. So, some of these numbers really are those arbitrage opportunities, and aligning themselves. So, you should take the cash market numbers with a pinch of salt. That's the important number. These are the series in 2018 itself. But let's pull up the next plate because we thought February was bad with a cut of around 690 points. Well, this was a little worse because we ended with a cut of around 700 points. And I'll tell you what, this is the worst series we have seen in the last decade. The last series in absolute terms where we saw a cut of more than 700 points in a single series was back in October 2008 itself. So clearly not a great series at all. Now, at the start of the series, you're looking to see how heavy the open interest is. If you're just looking at those numbers, at the start of this series, the October series, the total open interest is 1.65 crores. So just going by all those details that are flashing for you on the screen, it's a lighter series in comparison to what we have seen in the past. Even if you're looking at the FI exposure, that's a long exposure on the index futures, it's relatively lower and particularly lower than the last series itself. So you have 60-70% that's up for you on the screen. But at the start of this series, it's at around 46%. That may not be such a bad thing because in the last series, we saw the FIs were gung-ho, they were net long on the index. You also had open interest at its highest levels you've seen, in the last few months. And we know what happened in the last series. Now, if you look at the PCR, that's one indicator that tells you maybe we're getting into those oversold, territories. So we're at 0.93 odd, but who's to say? I've seen the PCR even at around 0.7 in the past. So just keep that in mind. In terms of, the levels you're looking at, 10,000 put, that continues to have the maximum open interest. But what happened yesterday, we were winding down on one series, but the 11,200, 11,100 calls, both of them were very, very active, telling you that, the bulls, they're a little nervous. The bears believe that they can go ahead and protect that 11,100 odd level. What's also important is the 10,000 put. That opened up actually in yesterday's trading session. So that's a good 1,000 points lower. It appears there is some protection buying on the downside. The Nifty levels you're looking at, the bears will look to defend 11,100, 11,150. The bulls will believe the recent low can be protected. That's around 10,866 odd. What all are you watching for, Ekta, in this series? Quarter two numbers, macros, as well as trade tensions. Let's see how it pans out. Interesting series. Well, we're coming off a very poor series, so that could give the bull some kind of hope. Maybe we'll see a bit of a bounce back at some point of time.
Yes, in fact, it's been quite a terrible series or month for the rupee as well. But on that note, we're going to wrap up on Power Breakfast. Stay tuned. Bazaar Morning Call just after short break.